A lot of people struggle with beating the market, and they get hung up on the idea that you can't beat the market. In this video, I'm going to offer you 6 ways to beat the market in the last 4 years, and likely for many years to come. So let's get started. When people refer to the market, it means S&P 500. The average return is around 12% a year. And if you look at the last 20 to 30 years, the average return is closer to 10%, which is fine. So 12% is a pretty good starting point in finding stocks that can beat the market. Once I go through this list of 6 or 7 stocks plus 1 index, you'll find that these are actually no-brainers. You can just invest in them today and sleep at night, knowing that you beat the market. So let's get started. The first one is Microsoft. And this is the company that has a large stake in OpenAI, one of the largest tech companies in the world. And S&P 500 was on average 12% per year. Microsoft, 19%. So if you just have half your portfolio in S&P 500, half in Microsoft, you're beating the market. You're getting a weighted average return somewhere around 15 to 16%. Next one, Apple. The average return for the last 4 years is 16%. Again, beating the market by 4%. Next one, NVIDIA. This one will be surprising for a lot of people 4 years ago, but it's very obvious in hindsight, 86% per year. Google, 18%. Meta, 22%. And finally, if you want to invest in an index fund that beats the market, then the QQQ averages 15 to 20%. There are a lot of tech companies performing better because we are an innovation-driven economy. That means we are focused on finding better ways to do something. In the past, there were newspapers. Now there are online blog posts. In the past, there were radio shows. Now there are podcasts. Being in the technology space allows you to achieve growth and higher earnings, which are 2 things you need to beat the market. And that is the fundamental analysis part of it. Now, if we take a step back and we think about, okay, you got a strategy to beat the market, but what about financial freedom? Beating the markets by a couple of percent is great, but it doesn't really help you get to financial freedom unless you have multiple investing strategies. So the first one might be long-term investing, which everyone is really hung up about beating the market, which in this video, you have 6 ways to do so. The second one is monthly passive income. What are you doing to get monthly passive income? Because ultimately, you can invest and let your nest egg grow, and one day when you spend it, it feels like you're kind of using the principal, and when you're dwindling down, that doesn't feel that good. But if you have an investing strategy that helps you generate income, then every month you know you're getting this income. It's kind of like a salary, and then you can use that to pay off expenses like mortgage, car payments, food, etc. And that feels a lot more comfortable because for monthly passive income strategies, these are more predictable. So that also means that somewhere along the lines, you need a transition between long-term investing to monthly passive income. And it will be surprising to a lot of people how soon you should make that transition, which is early retirement. So let me do some math here with you. A lot of people think you need $1 to $2 million to retire, which is fine. Making 10% return, that is 100 to 200K before taxes. And most people I talk to can retire with 100K, so really you just need $1 million, but it takes your whole life working till 65, 67 to save $1 million, which is the problematic part. It's not that you don't know what to do with $1 million, it's more like how do you get to $1 million that is problematic. Now the alternative is you figure out ways to beat the market investing in Microsoft. And you're able to retire with a lot less money. So in this case, let's say you're making 20%, which Microsoft is 19. That means if you only have $500,000 in Microsoft, 20% return a year, that is $100K a year. So you can retire with half the money you need. Now, personally, my target is to retire with 30%, which means you only need $300,000 to make 10K a month and then $100,000 a year to retire. So using this as an example, my co-founder, Michael, he has been using $250K for the monthly passive income strategy, and right now he's bringing in around 10 to 15K a month on that strategy alone. Achieving a 30% return, a higher return, will allow you to retire faster. That is really the key to financial freedom, more so than just trying to beat the market once you know S&P 500 gives you a 12% return. The question is, how do you make it predictable and consistent such that you have the confidence to retire off that income? That is really the key. It's not easy to do it with shares alone. You probably need to learn some strategies like options, which is something I teach, or you need to figure out some index funds that are distributing monthly income and offering you a high enough return.